If you're in the startup phase, 6 months up to a year, there's a program available, and you actually only need 500 FICO score. If you're at the 2-year mark and you have a 600 FICO score, I would look at a term loan.
All right, now let's look at the core rate preferred funding product. And this is my favorite product that we offer because the pricing is so spectacular that there's so many use of funds that a business owner could apply this to that's of value. It's leveraging other people's money and putting it to work. You know, we always say it's not the cost of the capital, it's the benefit of the capital that counts. And if the benefit is greater than the cost, they should proceed. Well, because this core rate pricing is so low in pricing, there's a lot of benefits. Even a prepayment discount, even a inventory discount is significant. So let's say, as an example, you were going to buy $100,000 worth of inventory, or you're going to buy 50. And they said, hey, if you buy 100, we'll give you 25% off. You only have to pay us 75 grand to get $100,000 in inventory. You go, what? But I don't have the 75. And you come to us and we say, we can get you 75 at a price of 1.2. 1.2 times 75, that'd be 15,000 in interest. So 75 plus 15 is 90,000. It would cost you over 12 months. And you're getting $100,000 in inventory now. So we fund the inventory discount, and the discount is greater than the cost of capital. It's a good use of funds. You get terms on your inventory and you get a huge discount. That's why this company exists, because I had someone offer me a huge inventory discount in a bottling product. I had a juice bottling company, and I didn't have the money to take advantage of the inventory discount. The bank wouldn't help me, but that gives an example of how core rate can be used because the pricing is so low. Now, the approval amounts are just generally $50,000 to $250,000. The approximate approval amount is 1 to 2 times your current monthly sales, your lowest monthly sales in the last 90 days. So as an example, if the business is doing $50,000 a month or their lowest was 50, they'd get approved for $50,000 to $100,000. Now, of course, it could be lower if they already have an advance or they have an average daily balance that's lower than usual, or they have some negative bank days, but that's generally 1 to 2 times monthly sales. Now, what can help? Frequency of deposits. If you got more than just a handful of deposits a month, like everyday credit card sales are being deposited in, or you got just more deposits, right? That lowers the risk that revenue could go away. So high numbers of deposits helps, not just dollar amount, but frequency of deposits. What hurts? How about NSFs? Having a lot of, or even some negative banking days, bouncing checks, or having zero balance, below zero. And your average daily balance helps or hurts. So this just gives you an example of the things that are looked at. Your payment history earns you more, or add-on funds, or renewals at better pricing once you have history with our providers as well.
Now, we do have a buy down program that we can, if they don't qualify for one of our select fundings, we can take some lesser cost on that. But for highly qualified businesses, we're going to offer repayment rates of anywhere from a 118 to a 129 on these programs. A $245,000 offer that we made with a 25%, and a $240 at a 12 months with the 100%. And you can see the difference of what the annual cost on those. We had a healthcare company with 100%. We had a consulting company there, and that wasn't the 100%, but it was because the 100% is only on 12 month deals. But these rates are really, really jam up rates, and we're getting these people these offers.